Hello guys, how you guys doing? Like a grand every time I bring a video or however there's something that I think it's worth a discussion, guys. I think it's worth sharing. So this is our VIX 75 or Volatility 75, those who are with the derivative broker. So the last time I made a video on this one, the price was still somewhere there. If you've been following my videos where I said I don't think this is gonna hold this support here, and I gave reasons why I don't think it's gonna hold. And currently look what the price did. It went all the way down. So now I think it's time for an update, no? So what do we have here, guys? If I was to ask you, how would you best analyze this? So you can see that if we go on monthly, I think there's a video that I made. If you go on monthly, the monthly will tell you the area where you should be looking for buying opportunities is this space in between the two lines here. Because remember what we are having there, we said it's higher than this side. Why one? So that's the only thing that we can say we have here on monthly. We don't have a lot, and we don't want to have a lot on monthly because of what? It's a very big time frame. We just want to know the direction. That's it. We're not gonna trade from there. So we can just put the line here, which is where it marks the initial point of where we're going to be, being interested. Once the price touches here, then we know that we can start looking for price to reverse. That's if the price gets there, obviously, because sometimes the price doesn't get there. It shows, it can still show the signs of weakness from where it is and then go up. But if it does that, we must still have confirmation that indeed it seems like it has sort of changed the direction. It's not gonna go all the way down, because sometimes the price can do this and reach that, right? So you need to be able to read out this structure if it's really just a pause or if the price is going up. But that's a story for another day, right? So in this case, we are done. We just have to mark what is the thing where our support area starts, and then we drop down to our weekly, and then we try and do the same analysis on weekly. Because remember, I said when you're trading, you can't just look at one time frame and then make decisions there and then trade based on what is happening on that time frame only. That's a risky, simply because you'll find that H1 is saying buy, strong buy, ne? But how daily chart, you find that you are sort of exactly at a very strong daily resistance. So I know it's not a good idea for you to buy and fight that daily resistance with the setup at H1. It can the price can go your way, but the odds are very slim. So that's why it is important for you to always check different time frames. So we dumped down to weekly. On weekly, we can see that the last time when you're going up, obviously we had the trend line there. Even in our previous video we put it there, and then now we broke that resistance, that support from the trend line. And we can see that in this area the price was not moving smoothly. So there was a strong fight between the bulls and the bears. You can see one was trying to push up, one was trying to push down. I'm talking about these two trend lines. I mean the two candlesticks. So one was bulls trying to push up, being rejected, back down, up, back down. So it's not a smooth move. Should we get an entry somewhere, should we get an entry and the price goes up, we're not gonna neglect that. Obviously I already discussed it, so we can put our TPs there. Like one. But first we need to try and find an entry. Remember I said when you're marking your zones, you must just mark the zone above and the zone below, so that you have an idea or know the price is trying to move from this to that. So on monthly, obviously we marked our support, our resistance could be there at the top. This is long term, whatever. So on weekly, if we want to mark our zone below and our zone above, weekly, remember we said there's something happening here. And again, Sheba here, we can also say at this level, this is where the floor on weekly has been, and we are currently inside this floor. The price has been bouncing here nicely, so if that one fails, it means we will be going for what, the last one, which is going to be a very nice one, because remember it is also inside that monthly one, so it will be sort of a weekly support inside a monthly support. So that should be very strong. That should have high odds, but even the current one can still hold the price. As you can see that the price, it's not coming here for the first time. Obviously you can see we hit this, the one that I'm marking here. We hit it there, we hit it there. Here we fell short. Mara, we can see we're trying to go for it. So I wouldn't be surprised even the current one holds the price. But remember, if it holds, we are not going to neglect this. We have to put our TP somewhere there. I hope we're still together, good people. So let's put another horizontal line that will mark our thing. Or for this one, let's use a rectangle and mark the weekly zone that is currently holding, so that we can check if it's gonna hold or the price is gonna pass it. So it's somewhere there, yeah, somewhere there. So we're gonna move to a different time frame and check what's happening that side. So this is where it is. So you can see, even though I didn't draw it all the way from there, Mara, you can see that, because remember I'm using this bar here. You can see this rectangle that I have here, it's exactly at the thing where I put this cursor here, and then it ends somewhere there, which is, I don't have to necessarily start all the way here and draw it like that. So for as long as it is aligned, even if I just put it here, it's fine. But for as long as it is aligned with what I'm trying to do from this side, then I know that even when I'm going down to a smaller time frame, I'll still be like, this is where I'm having my weekly support. Why one? So weekly we've hit the support. So let's just go down and see if we can't find what do you call this, if we can't find any signs of weakness that would be like, oh okay, it seems like the weekly support is gonna hold, let's try and buy. And then let's go to daily. What do we have on daily? So on daily we have a daily support, which is inside what, which is inside the weekly, obviously. So that one, it starts here. So remember, you must treat each time frame as an individual time frame. So you can't say because you analyze that time frame, I don't have to necessarily analyze it, because remember the structures on two time frames won't necessarily be the same. So the support on weekly, when you're drawing it, it might not look the same as what a support on what on daily, because remember on daily you've got more bars compared to weekly. Same way here. Remember our weekly support starts there and it ends exactly here. But now when you're dropping down to daily, we find that the daily support starts here and ends there. They are more or less around the same area. Mara, remember, the lower you move in your time frames, the more the zone becomes smaller and the more you can even find entries. Because remember the thing, remember we said the small time frame is gonna have to, from maybe let's say 4 bars on H1, then we are having 1 bar on H4. So obviously when you're moving down from H4, that 1 bar can be our zone. But when we're moving down to H1, because we've got 4 bars, we can only use 1 bar to have the zone, meaning the zone on H1 is in most cases, or 99% of the time, it will be smaller than the zone that I have on H4. Same here. This was our weekly zone. When I move to daily has a smaller zone, but they are located at the same area. So we can see that currently the price has hit weekly support area. It is also hit the daily support area, which is inside the same weekly zone or area that we talked about. So if we see signs of weakness, we are more than welcome to buy. So if we are buying, we can go all the way. Maybe we'll just see, we can put our TPs there until we hit that area that we talked about. I think it's somewhere here, the one on weekly. So this is all that we have on daily. We've hit the daily support. So let's drop down to H4 and see if we don't have, this is where it gets interesting. Let's try and remove this rectangle so that it doesn't hide the price. We know exactly what is happening. We've already spoken about the zones that we have hit, so we don't have to keep the stuff here. We want to see the actual price. Okay, so what do we have here, guys? What do we have? We have this guy here, which is rejection H4 candlestick, located at both weekly and daily support area. Remember, we said this pin bars or the rejection bars, we only considered them when they are located at our significant areas, and those significant area can be the support, the resistance, or trend line. I already explained how can they be significant. So those are the important areas where we can expect the price to have reaction. So that's why we are only considering them when they form there, because we'll be expecting some reaction. So if they form, we know that price could be reacting in about to 10. So that's why we only consider them. So if it just forms in the middle of nowhere, we don't consider that one. We just stay on the sidelines and wait for the price to hit our zone that we are interested in. Remember, there's nothing wrong with going through the day without executing. Not taking a trade is also a trading decision. You don't have to always be executing. So you must be patient. Just identify the areas that you're interested in and wait for the price to hit that. So in the meantime, while you're waiting for the price, let's say on this H4, you are still on this VIX 75, you're still waiting for the price to hit this current weekly and daily support. Let's say the price was still somewhere there, you are still waiting for it to get here. You don't have to necessarily try and outsmart it. Just be patient. Wait. In the meantime, you can go and check something else while you're waiting this side, because remember, there's a lot of things that you can trade. So while you're still waiting for the price to touch your zone, go trade something else. Don't try and force trades here. Just say, now I'm waiting for this, then you're done. Move to something else. So currently on our H4, we can also put maybe, let's say, okay, let's do it this way and put a trend line, guys. Let's say we're not gonna go lower than this, but obviously H4 it's quite big for VIX 75. But here I like the fact that they can allow you to even trade with a smaller lot size. So we can mark this. This is where you have to think, guys. Not the zones that we are interested in. They're not only at the end of let's say we're moving down, we have this, and then we have that. We are not only focusing on this and that. Sometimes you can see there's some friction here. So when you're going up, you can even get an entry here and get this. But now, how do you identify this? I'll make it in the next video. In the next video, I'll be showing you how to identify those zones that are not at the end of our move, not here. This is our support, this is our resistance. So these are straightforward because they are at the end of the move. But what about that resistance that is in the middle of the move? So I'll discuss this one in the next video. So the same as what we're having here. I won't go much into the details. There's friction here, and then make sure that you watch the next video where I'll be showing you how to identify these ones. So currently here we can say we have friction here. So if you were to say I have a pin bar, if the second one is a pin bar, and then you put your thing above, you can say let me buy, and then when you hit here you can exit, because remember there's friction. Number one, there's two factors that will be against your buy trade, which is going to be our resistance, the one that I marked in pink, the two horizontal lines, and also the trend line will also be against you. They're sort of putting in the bearish force. So you're trying to go up, but these are the two factors that will be pushing against you. And then on your side, when I will be having both the weekly and daily support area. Remember, you are inside them. Those ones are saying we're going up. They are bigger than the H4 resistance and H4 trend line. But that doesn't mean the price can't react and come here before taking off. So that's why I'm saying you must play it safe. So when you're buying here, you wait there, you take your profit, and then if it breaks, and then you can identify another zone and take another buy. There's nothing wrong in doing that, rather than just watching all your profit fade away into a zero or break even. We refer to that to it like a C break even. So here we are going to this is a question mark. We're going to have resistance there. Mara, the bigger time frames are saying what? Up. So I think that's how you must look at this one, guys. So try and find entries for as long as the price doesn't go below these pin bars, then we are fine. Live one. So let's do one more. Maybe let's do H1. On H1 we are just moving sideways. There's nothing much happening. So in H1, remember I said each time frame you must treat it as an individual time frame. So just because I have this trend line here, when I come to H1, this trend line doesn't look all right. But when I'm on H4, it shows that it belongs here on H4. But on H1, because each time frame is an individual time frame, H1 will have its own trend line which can start here and go there, something like that. And here there's too much friction. We can say we also have a zone here which is our H1 zone, H1 resistance area. So when you're buying, we go there. But remember, this is very important. This is very, very important. Choose your own 2 or 3 time frames that you're going to focus on, because remember, the more you have time frames, the more they might not be agreeing. So it means you'll be missing trades. So if you just pick your own time frame, someone can say, no, I just want M15 and H1. But remember, there must be a link between the two. Someone can take H1 and H4. I can take H4 and daily. Someone can take daily and weekly. So you pick your own time frames. You stick to the structure that is there, but you don't neglect. Let's say, here's the important thing that you have to note. If I'm picking M15 and H1, I still have to check what is happening on H4, daily, weekly, and monthly. There, I just want to see what I want to see, the significant level, so that I need to know now where is the higher time frame resistance and where is the higher time frame support, so that I do not, whatever that I trade here, it doesn't go against that. If I'm too close to the resistance, obviously I can't be looking for buying opportunities on M15, because remember, resistance is just nearby on a higher time frame. Price can just reverse and invalidate my M15 structure. But if I'm still fine, and if I'm still, there's still enough space between where I am and the resistance on higher time frame, then I can buy all the valid buying setups that I'm seeing on my time frame combination, which are my M15 and H1, for instance. Y1. So in this case, if someone picks H1, they will be saying, now my friction area is here and my trend line is here. And then they also, remember, they checked H4, they checked the weekly, they checked daily. They know that they're inside daily and weekly demand. So if they are looking for buying opportunities, they are very much correct. They can do that and buy. Mara, they must take profit. Number one must be there. Y1. So yeah, I think currently what you have to be doing, look for buying opportunities to at least reach the trend line on H4. If that doesn't happen, remember, for it not to happen around the price, if the price doesn't go above this, if it doesn't go above this, if it goes above it, we expect it to go somewhere, at least somewhere there by the trend line and this friction here. So look for something like that. But if it goes below there, then we know that we are neglecting this. Price can still push a bit lower. But currently we are having a second pin bar. We have a higher, maybe let's say 70% chance of it going there, and then maybe the remaining 30 it can still go down. That's if the price goes above here. That's one thing that I've noticed. When the price violates the range of a pin bar, when it goes above, it has higher chance of going all the way up to the trend line or to the next resistance. So I'm gonna end it, guys. I'm gonna end it here. So take home what you need to be looking out for, buying opportunities once the price breaks above the H4 resistance, then you can just buy and go there. Remember, that's where we'll be exiting, and then there's also a chance of it going all the way up. Why? Because of what we are having on weekly. We said we hit what? We said we hit this, guys. All these time frames must link. They must link. We hit this, so there's even a chance of it going all the way up. But if we go below the H4, if we go below this H4 pin bars, if we go below this rejection bars, it means now we have a chance of going what? Of going to the week, to the monthly support, which is going to be the strongest of them all. So this is where you're going to be expecting a bigger retracement until at least there. All right, guys, I'll see you in the next one, where I'll be showing you how to identify the support and resistance levels that are located in the middle of a trend or in the middle of a move and not exactly here. All right, cheers, guys.